Well, good morning and welcome to Business Morning. It's another trading day right here in Lagos, Nigeria. Hope your portfolio is already, taking shape in this month of August. We'll be covering a lot today from Nigeria's real estate industry to the latest in the oil market. But first, let's see how your money performed yesterday at Custom Street. Nigerian equities market opened the new trading week on a strong footing. As renewed buying interest in large cap stocks that pushed the all share index into higher by about 1.2% yesterday. To kick off this trading week, 248,000. We see for the volume, value, and deals. I was mostly in the green there. Volume 1.13 billion traded, valued at 27.02 billion. That was higher than Friday. I flip over to other parts of the market now. So we see the top gainers for yesterday. FCG Insure, that was up 10%. Chams, that comes in at 4.48 yesterday. NACO there at 9.29% higher. And we did see profit taken on Ava Capital there, closing at 9.90 kobo yesterday. Then we did see Airtel Africa there. That woke up in the market. Let's flip over to other parts now. We see the top trades. Conal PLC 354.07 million. Access Core there, financial services. So mostly financial services there on the top counter. We see investors are positioning around corporate earnings and key market developments. The focus now shifts to whether this momentum can be sustained as the week progresses. Meanwhile, dividends expectation this week, we're expecting payment of 128.26 billion naira for the dividend lovers there. Guinness, Unilever, Seplat, and VFD Group, they're going to be paying this week. And Seplat there taking a big chunk of 98.40 billion. Annual dividend yields there about 2.52%. So I'm sure most of investors will be expecting that this week. Then to some top news now. Heirs Life Assurance. They've appointed Pastor Jerry as a founder and lead pastor of Streams of Joy International Ministry as an independent, non-executive director on its board. The appointment, effective August 10th, is part of the insurer's push to deepen financial inclusion, strengthen consumer trust, and accelerate insurance adoption in Nigeria. The company says Eze's experience in community engagement and social impact will bring a new perspective to its mission of making insurance more accessible and relevant to Nigerians. Let's flip over to the oil market now. Seeing oil prices, it rose more than 2% today to an over 1 week high. Brent crude futures, we see that was up 1.70%. Again, Brent making that run to the $90 per barrel level, 1.7% higher, about 2% gains earlier. WTI 83.55, 1.73% higher. Both benchmarks trading at their highest level since June 31st. So, definitely we see escalation and de-escalation right there around the Strait of Hormuz and the war in Iran. And we see Nigeria's domestic refineries recorded a major increase in crude oil supplies in the second quarter of 2026, driven in part by higher deliveries to the Dangote refinery as the federal government steps up implementation of its domestic crude supply policy. NUPRC data shows local refineries received 53.7 million barrels of crude oil and condensate between April and June, up 88.4% from the first quarter. The domestic crude supply obligation recorded 97.4% performance during that period. So that's according to the latest data there. Now let's get the latest in the commodities market with Dr. Efoma Wokolo, Assistant Vice President, Financial Derivatives Company. She joins me via Zoom. Great to have you on the show. Good morning.
Good morning, Larry.
So we're seeing, great to have you. So we're seeing the same old movement again, de-escalation leading to lower oil prices, then escalation. So it seems like the U.S.-Iran deal, seems that's fading, at this point. What are you seeing?
Well, with what we are saying, I think it's going to take longer for this conflict to be resolved, because right now they are seeking for compensation. The US is asking for compensation, Iraq is asking for compensation. So I think there's going to be a kind of loggerhead between these two countries, and if this happens, I think the market is beginning to factor in that there's going to be constraint. That's why you see oil price almost hitting $90 per barrel this morning. So I think the better question is, how is this going to affect us as a country, Nigeria. We have both the positive impact and the negative impact. While we have seen PMS price at pump price at 1,210 naira, it means that in the near term we might likely see PMS price increase again. So that's what we are seeing, and the government is still going to benefit from this, and is going to, hopefully, is going to impact the naira. As we have seen, naira is beginning to depreciate, and naira is depreciating. We should not forget that even though oil price is high, most of the sales that the government have done so far are forward sales. So I think that is why we are not seeing that impact the naira. The naira continued to weaken. As at yesterday, it was 1430, and that 1430 simply means that the demand is high. Demand for dollar is high, and the gap between the parallel and official market has widened to about 66 naira, and that could give room for arbitrage or round tripping. So I think that even though the oil price is increasing, we have negative. It's a paradox for us, both negative and positive. So, but I think that the negative it's going to weigh more on us as a country. Then hopefully we think that if this is resolved, but we don't see this resolving in the near term, what we are going to be seeing is often, I'll call it a yo-yo. We are going to see like a yo-yo dance of up and down, the escalation. That's what we'll continue to see until this issue is resolved between the US and the.
It's quite interesting. At some point, last week we did see oil prices fall for the trading week, down about 8% for Brent, 11% for WTI, and it was on the back of de-escalation. So it's like you can't even rest on de-escalation at this point, because just a week ahead you're getting escalation again, and the US-Iran deal there seems to be fading at this point pretty fast. But talking about the FX market, you did say the rates in the official and the other market there, we're seeing that spread widen again. Do you see the CBN intervening this week?
Well, the CBN has been intervening all along, and the July data that we saw showed that FX inflow increased by 59%, and this is basically from within local dollar supply and the CBN intervention. If CBN had relented in intervening, I tell you, the naira to dollar would have hit almost 1450 or even 1500. But the CBN has continued to intervene, but it's just that the demand is high, because this time we're entering the ember month by next month, and so traders are beginning to import. So there is demand for FX to import for Christmas season, and also international students are resuming, so parents are already sourcing for dollars. So the demand is outweighing the supply. So we are seeing this gap, and I think that it's temporal anyway. The gap is temporal. So we know that after this pressure for school fees, and the naira may rebound in the next.
Right. So I guess it's that season. Yes. Again where demand rises for the dollar there. But let's look at inflation now. I believe you have your forecast set. That's for the month of July. I believe the number is 15.87%. That's kind of like an easing there.
It's an easing, but it's basically statistical. I say statistical because we're talking about headline inflation. Headline inflation, I always say, is historical, comparing this year and last year, how the CPI has fared. So we're going to see the base year effect impact the inflation numbers we are going to see. So that's why we are going to see a decline. So if you look at some variables that we usually measure, so looking at last year and this year, you see that naira last year traded at about 15.54 to a dollar, and now it's trading about 14.30 to a dollar. So that's what we are seeing. And also the money supply growth for 2025 July traded at about money supply growth was about 10.2%, but July this year, money supply growth is about 13.6%. So showing that the last year is better than this year. So if you look at commodity prices, I'm going to just take very few commodities. If you look at the price of garri in 2025, it was about 32,000 naira, and this year is 20,000 naira. So I'm comparing July last year to July this year. So the price of rice last year was higher. The price of the rice last year was 87,000 naira. This year is 65,000 naira. The price of flour was 65,000. This year is 54,000. So this base year effect. So prices are cheaper this year compared to last year. So that's why we'll see. But if you look at month on month, which shows a true picture or reflection of what inflation number is truly is going to be, is showing that there will be an increase. There will be an increase in inflation, month on month inflation. And what does that mean? It means that prices, comparing prices in June and prices in July. So if you compare prices in June and July, you see that prices in July is way higher than prices in June. So that's why we're going to see
okay.
This
all right.
increase.
I guess we'll be expecting that data. It's one thing for prices to drop, and it's another thing for consumers to be able to afford whatever that drop is at this point. We'll be looking out for that data. Thank you so much, Dr. Fuma Wokolo. She's the Assistant Vice President, Financial Derivatives Company. Thank you.
Thank you for having me, lad.
All right, to other stories now. Transforming livestock from a subsistence activity into a modern technology-driven and globally competitive sector to drive food security and economic growth remains a commitment of the federal government. Secretary to the Government of the Federation, Mr. George Akume, made this declaration at the All Africa Conference on Animal Agriculture in Abuja. Our correspondent, Sarah Achimugo, reports.
For Africa's food security.
The 9th All-African Conference on Animal Agriculture is bringing together policymakers, scientists, researchers, development partners, investors, and livestock producers from across Africa and beyond. The conference is themed Repositioning Animal Agriculture for Africa's Food Security and Global Competitiveness, and focuses on productivity, animal health, genetics, and value chains.
We are all excited when we meet because there is always some new information that we are sharing. This could be about new technologies, new approaches, new problems like climate change, controversial issues. We shouldn't run away from the fact that livestock can create some controversial issues. We should have a conversation around those and look at solutions.
Nigeria possesses one of the largest livestock populations in Africa, with an estimated 58 million cattle, 124 million goats, and 660 million poultry. The drive of the government is to position Nigeria as Africa's global leader in livestock production.
Livestock contributes significantly to agricultural GDP in many African countries and supports the livelihood of millions, hundreds of millions of people, particularly women, youth, and pastoral communities. In Nigeria, we have embraced this new direction with determination.
Key initiatives undertaken by the federal government to improve livestock include the Dairy Transformation Program to double local production and reduce imports, promotion of ranching and modern livestock systems, and support for women and youths in the livestock value chain.
As we pursue economic diversification, we must acknowledge that livestock production remains a major driver of national growth. Recent economic performance demonstrates the growing importance of non-oil sectors, including livestock production, in supporting Nigeria's economic resilience and sustainable development.
An award is presented to the representative of the President for his role towards the livestock sector. The next few days will feature sessions on how to reposition the livestock sector for Africa's food security.
One last bit.
Sarah Achimugu, Channels Television News.
And now to our next conversation. We see Nigeria's housing crisis creating both a challenge and a massive investment opportunity, with millions of Nigerians still in need of, decent and affordable homes. The government is looking to, deepen housing partnerships with countries such as China and Japan, bringing in foreign capital, technology, and construction expertise. But there's a critical question. Will these partnerships help Nigeria close its housing gap, or could they put further pressure on local developers already struggling with high construction and financing costs? Well, joining me to discuss now, we have Mr. Akin Patola, is the chapter president, FIA BCI Nigeria, International Real Estate Federation. And it joins me right here in the studio. It's great to have you, sir. Good morning.
Morning. Thank you for having me.
Fantastic. So, we're talking housing today, and we've seen some moves, from the government lately. I guess the latest one was the Nigeria-China housing proposal, looking at building about 10,000 affordable housing, 10,000 units. We've seen the mass social housing targeting 150,000 houses, renewed hope units. They're supposed to provide about 7,000 housing units. The planned renewed hope cities, I think they're looking for about 6. Estate locations under construction, I think they're about 12 so far. So we're seeing the plans there, but the gap is still is still wide. Let's look at the proposed Chinese and Japanese housing partnership at this point, because some would hear China and wonder, even China have their problems when it comes to the housing market in their own country, at this point. But there's nothing wrong with having a partnership. They're supposed to bring in technology here, get as many units out as possible with less cost. How are you seeing that?
Okay, thank you. So I think it's a good initiative. I always like when countries' economies think out of the box and look for international best practice. As you rightly said, China has gotten it right. There is no country in the world that has gotten the housing shortage challenge solved. I've been opportune, because of the association that I belong to have traveled to over 50 countries. So when we go to those countries, we like to do some comparative analysis and benchmarking. Egypt is doing a lot, close to 1 million units over the years. Singapore also, Japan. These are countries we want to learn from. China, with the technology that you just mentioned, these are things that we can adopt. But 2 things are critical based on the question you asked. Number one, there's the affordability challenge and financing challenge. If we don't get it right, we still have a long way to go. Don't forget that we have a huge challenge of population. A lot of our population are within the youthful demographic. So we need to be very intentional. It's not just about building now. It's about, can people afford it? Then where's the financing? So everything is not cash-based, and we can use mortgage to also bridge that gap.
Right. And, talking about affordability, at this point, we've seen the prices of, homes skyrocket, between, if you're measuring in the last 6 years, or so. And it almost seems that all of this started when the Naira, got devalued.
Correct.
So that impacted everything. And before you could get, a duplex, a detached house in, Chevron area for like 50 million. That was before, the great devaluation. I'd call it, that at this point. So it almost seems, if the Naira was still around maybe 300 to the dollar, we might not see prices rise the way they've risen so far. Does that make sense?
Yes, it does. Don't forget that real estate as a product, people usually like to compare across board with other forms of investments. So you have the investor market, you have the developers market, and you have the occupiers market. Just think of it like 3 legs of a stool. Those 3 must be in place, otherwise it will be wobbly and you can take a fall. So we've seen the huge cost inflation across board. Prices of properties are way high, not just in Lagos, across everywhere. And it's not isolated to just Nigeria. It's the world over. So is there demand for those places? If the demand is not there, gradually those prices will begin to fall. But the demand is there. But it's not across board. We see a lot of developers concentrating on the top echelon. By the top echelon, I mean the ultra-luxury residential aspect. They build there, tenancies, they rent faster there. But there is the opportunity at the bottom of the pyramid. There's a book that I usually like to lay emphasis on by C.K. Prahat. Fantastic book that speaks to, the title of the book is Fortune at the Bottom of the Pyramid. So if a lot of developers, investors, financiers can concentrate on that bottom part, there's a huge number and it's also very profitable.
Right, because you check, houses around the Ikeja maxes there, 700 million for a detached house. And I'm wondering, I know they're buyers, but wow, looking at what's going on so far. The affordability problem now, why can't Nigerians afford homes? Monetary policy rate, 26.5%. Headline inflation for the month of June, 15.91%. And the housing deficit, about 14.93 million. That's a housing deficit. So we're seeing cost of borrowing is high and a devalued currency. It's like a double whammy. At this point, you get a country like China, you're trying to partner with a country like China, they don't have the, cost of, the high cost of credit like we have here. So it almost seems like, is our problem self-inflicted, or is there a way around it, in your opinion? Because I don't know how you can build a house if you're getting a loan at over 30% and still sell it affordable.
So I agree with you. Statistics data is not encouraging. It is tough looking at those numbers. But there's been a lot of intervention. One of it is the MRIF that government has put in place. Fantastic initiative. Before now, you could only get maximum of maybe 15, 20 million, which is a drop in the ocean. A lot of people are not within that bracket. It's much more affordable. With MRIF, you can now maximum of 100 million. Interest rate, maybe 9.7%, is more attractive. Personally, I've seen a lot of people jump into the home purchase ladder. With time, that will increase with policies like that. You see, a lot of things are happening. Affordability and financing, to me, are the more critical aspects that we need to look at in this basket. We cannot build enough houses. It's not possible. If the data you just churned out, maybe about 15 million shortage that we have, we still have houses that are also inadequate. So if we plan to do 1 million homes every year, it is not just for government at every stage, whether it is the state government or federal, to be able to build. They need PPP arrangements where the private sector will also lead. But I'm an advocate of government creating the enabling environment so that private capital can come in, yes, and also assist to be able to take us out of this quagmire. But I strongly believe that, yes, we can do it, but we need to put all stakeholders together and begin to have those conversations together.
So if we're because we've seen most of the time, China has been accused of, the Chinese government have been accused of, supporting their producers, too much with affordable credit, and most countries can't compete with that. Is it time for Nigeria to start thinking, in that line, actually giving unfair advantage to developers so we can get more units out there? Can we afford unfair advantage as a government?
So the quick answer to your question is yes. Affordability will now be a challenge. We know the Chinese government, they have one of the richest nations, so finance is not so much of a problem for them. But for a country like ours, there are so many pressing needs. There's infrastructure, there's defense, there's healthcare. Everybody pushing on the limited finance that government has in place. I'm a strong advocate of bringing in private capital. These private capitals are available, but they need to see transparency, they need to see the right data, and they need to see that we also are dedicated and interested in bringing these funds in. We all know we have the effective demand. we have the population. So there's no gain saying that, look, if you build it, people will come, whether in the rental market or in the outright purchase. But you see, it's the other thing that I mentioned earlier, that we also need to be very careful, because what we see now is maybe about 3 or 4% of GDP is currently used in the mortgage space. We need to increase that rapidly. So private developers need to come in, government need to assist them gradually. Then we need to also look at the entire ecosystem. What do I mean? Don't just take a single product. Maybe 70-75% of these building materials for building a home are imported. How can government look at that so that we developers can build to scale? That is how we will reach these huge numbers, housing deficit that we're speaking about today.
Yeah, and definitely the mortgage market, we definitely need that to mature more, in Nigeria. But let's imagine now, young guy, working, maybe working in a bank or earning maybe 5 million in a year, 5 million naira. He's heard about MRIF, at this point. He would like to, get in there. What's your advice for somebody like that?
Awesome. So before now, it has been extremely challenging, because the usual practice for commercial banks or mortgage institutions is to look for salaried customers. But now that has changed. If you bring very viable income base, so even business people can now get on that. It is difficult, somebody earning, so maybe a teacher or a regular entrepreneur, earning maybe 500,000 or $1 million monthly. It will be tough for him to save 50 million naira, 60 million naira, you agree with me, to be able to purchase a home. But with a mortgage, and we see this apply in other climates, so it can apply here. He can easily get a mortgage and use that, his annual income, a certain percentage, and use that for his home ownership dream. That will take some people more into home ownership. And also, we also have the thinking out of the box scenario. It's not everybody, according to me, that must own a home. We have people that they don't mind renting, but is the house decent? Is it safe? Is it also affordable from a rental standpoint? Yeah.
Right, and definitely looking at the rental market, we see that is also overheating at this point, and most of the tenants we see out there, it seems like they're at the mercy, of the landlord. And most of the time, another prayer point is, hope your landlord doesn't increase rent in the following year. So there's a lot to navigate, in this market, from rentals to hoping to purchase, at some point. How do you think the average tenant can, navigate all of this, right now, knowing that, incomes are squeezed, there's so much, trying to get into your disposable income at this time? What's your advice for them?
So I think we have to do a lot of, we need to be practical. I'm happy I use Lagos State as a case study. So with the red and the blue rail that we've seen now, people can now live slightly at the fringes. The green rail that will take people, will connect the other two rails, do Marina, Victoria Island, all the way to Ibejuleki, about 60 to 70 kilometers. People can now stay a little bit further where you can afford. You see, the challenges that developers have, and when I say out of the box thinking, it's across board. We need to have developers that can build communities as against estates. So even if I stay far, but there's reliable infrastructure, I can get a place, I can get a regular market, I can get schools for my children, I can get places, good infrastructure, those amenities are there. That's what you see happen in a lot of these advanced countries. Then you can take reliable public transport to work and back again. We also need to do a lot of mixed-use homes within communities, like I said. So the middle class can live slightly with, yes, the more lower end of the pyramid, and everybody can live together. So your drivers, your cooks, your nannies can stay within close proximity. But I see it happen in other places, and it can also happen here. We just need to be a bit more intentional in our thinking, in our development, and also in our financing.
Right, because you look at the planning, when it comes to a state, it almost seems like some states are really connected.
Correct.
So you can say this area is not so far from there, but when you look at a state like Lagos, it seems once you're in the island mainland, there's a huge divide. You know, at this point, if you're staying in Ikorodu now, I want to work on the island, that should be possible.
Correct.
You know,
Correct.
so if we can solve infrastructure so that Nigerians can get around Lagos or Lagosians or any other state, they can get around that state quicker, is that like a silver bullet that can actually crash these prices down when it comes to, you know, rentals and sales? You think that can?
So it won't completely crash the rental price, but it will help. Yes, and I say that because, you know, Lagos State government, they seem to be at the forefront. They're doing amazingly well. I've been following what they're doing even with the waterways.
I'm so sorry. Please,
Okay.
please hold that thought. We're going to join a live coverage now. 2026, Rule of Jonathan Democracy Dialogue. That's happening in Bauchi for our DSTV subscribers. But we're live on other, you know, platforms. You can still follow the conversation right here. So sorry, Mr. President, for cutting you there, but you can carry on.
That's fine. So as I was saying, I've been following extensively what Lagos State is doing, especially with their waterways. At least 18 out of the 24 or so local governments can be reached via ferry. So they have a partnership with the European Union to fund and actively develop that area. So within the next few years, you will see fantastic, safe, secure water transport. Less pressure on our roads, less pressure on traffic, even on the trains. So people can stay in Ikorodu, like you mentioned, stay at Ibejuleki, and take a short, safe, affordable ferry ride to the place of work and also commute safely back. Gradually, you see a lot of developers tend to follow the money, they tend to follow demand. So if they see that people don't mind staying at the fringes, at the further ends, then they will build. And I also encourage developers to also build across board. Let's have studio apartments, 1 beds, 2 beds, 3 bedrooms, not just 4-bedroom detached houses and 5-bedroom villas.
Yeah, because we love the 4 and 5 bedrooms.
Yeah.
We love the mansions, but sometimes all we need is a 1 bed.
Thank you very much.
At this point, thank you so much, Mr. Akin Opatola, the Charter President, FIA-BCI Nigeria, International Real Estate Federation. Thank you so much for coming on the show today.
My pleasure. Thank you for having me.
Fantastic. All right, we'll take a break now. When we come back, look at the energy market. That's in a moment. Just stay with us.
We interrupt this broadcast for this special announcement.
All right, today we're looking at how, partnerships can solve most of the major problems we have in different sectors of the economy. We see Nigeria's energy sector remains one of the biggest opportunities for investment, but unlocking that potential requires strong partnerships, capital and policy certainty. So what will it take to turn Nigeria's energy opportunities into bankable investments and sustainable economic growth? Joining me for this conversation now, we have George Koroma, the delegation partner, Scottish Africa Business Association. Great to have you on the show. Good morning.
Good morning. Good to be on the show this morning.
Fantastic. So, looking at Nigeria's oil and gas industry right now, and energy industry, where do you see the biggest investment opportunities right now today?
I suppose what I can say about that is, as myself as a business analyst here in Aberdeen, Scotland, and having worked within the intersection between the Scottish and West African energy sectors, to help answer that question, right, I'll give you a bit of a background context on the market here, right? So Aberdeen, right, over 50 years ago, right, used to be a fishing town. Then came oil discovery, and that grew into like an energy capital of Europe, right? Building world-class talents, the technology, the institutions. And now the basin is mature, and the Scottish operators and investors are looking to export this expertise abroad. Now, Nigeria, on the other hand, right, this story runs parallel. Over 50 years ago, you had the international oil companies coming in, they brought the capital, the talent, the technology, and developed the assets. Now, Nigeria is at this inflection point where you've got strong local players and indigenous companies leading the charge. Now, what they need at this point is the capital and technology to develop both new and existing assets. Now, what we've been seeing, right, within the North Sea operation is that, Scottish operators have committed over the last, since 2022, we've seen about 18.9 billion of international expansions have been committed, right? And we at the Scottish Africa Business Association are keen to ensure that, West Africa gets a slice of that action. And so what we see currently too as well is, for example, Serica Energy, they currently pump about 10% of the UK's gas from the North Sea. And they became one of the latest companies, to venture abroad and had committed approximately about 45 million to a deal to acquire Ferrous Energy. And this is an example of, you've got companies here in the North Sea looking for international expansion abroad.
All right, so definitely you did mention technology, the need for technology and need for capital, but have you seen a case where in this same industry somehow maybe you get the technology and it somehow reduces the size of capital needed to develop? Have you seen that kind of opportunity?
So what I have also seen is, very recently, I suppose in terms of like developing fields, you've got well intervention activities, which, from estimates, you've got about 37 billion market by 2030. I suppose what we're starting to see, with technology is you've got technologies that companies are bringing into the West African market, and they're using it to optimize the wells and, to bring out more of the oil and to sell it into the market, which is very, very good, because that's technology being deployed to optimize production, which is good. And it helps us to be able to achieve the 3 million barrels per day of oil production that, we as a country has set as an ambition. So I see, from our analysis is you've got Scotland has the technology and the capital. Nigeria has the assets and ambition. Now, we're trying to make sure that we're having those fruitful conversations so we can see more of these deals happening between Scotland and the West African markets.
And most of the time, when you look at these kind of partnerships, somehow they find a way to tilt towards one side or one party here. How do we make sure both sides, get the best, at this point?
So I think to answer that one, what we are doing currently too as well. So we've got the Energy Export Conference happening in September, and as part of that, we're leading a delegation of senior West African leaders here into Aberdeen for that Energy Export Conference. Partnerships are built on very good relationships. Everyone understands, what you're bringing to the table. I suppose what we are also ensuring with this delegation is every meeting of this delegation is pre-qualified. Every introduction is purposeful. So people come in with an expectation and you leave with a beautiful relationship that can grow into something better for the future.
All right, let's look at investor confidence now. What would you say are the biggest concerns, currently holding investors back from committing, more capital into Nigeria's energy sector? Or have you seen some improvement, when it comes to investor confidence?
I would say I've seen good improvements. I suppose with the NUPRC licensing round, the 2025 licensing round, it was one of the most transparent licensing process we've seen in recent decades. And that is a huge boost, for the West, for Nigeria as a whole, because then I suppose you could say it's part of that renewed hope agenda where you've got the investors now looking to the market, having seen that process, gone through very transparent, and we can see that about 37 blocks have been awarded to 31 companies. Now, I suppose we now need to take those conversations further in making sure that, the Nigerian-Scotland energy partnership is built on very good, solid foundation. And so this is, the future is here. The opportunity is now. It's here, and we should be leveraging it.
All right. Do you see other, country partnerships that also have potential at this point?
I suppose there are lots of example use cases across the board, but what we are currently seeing is the Nigeria-Scotland energy corridor is one that is mostly underutilized, and we should be seeking to commercialize that relationship, because then I suppose there are lots of similarities between the Scottish market and also to the West African market. You look at it, we've got the same time zone also too as well. You've got people who've been trained in Aberdeen and also working in various facilities across the world. Now, given this very strong relationship that has been built over the years, and with lots of senior leaders who have also worked in the North Sea Basin, you've got a beautiful relationship that can build into something that attracts more investment into the country.
All right, and definitely a lot happening in the oil and gas market at this point. 1 week we're seeing oil prices down. The next week we're seeing it start to rise again, and we're looking forward to a deal between the U.S. and Iran for the longest time so far since the war started. But do these issues they kind of impact investors in that sector in your opinion?
I suppose you could say it's like a blessing right now, because then folk are starting to look to other markets. Previously people had always been looking to the Middle East, for growth. Now we're starting to see a lot of interest now into Africa, which is really, really good. And we should be riding this wave and this trajectory. I suppose when you look at also too with the huge, an investment that Mr. Dangote has put, on the continent of Africa, and also specifically in Nigeria itself, it builds that confidence, that a project of this magnitude has been achieved. And, the Dangote refinery needs all the crude it can get. So as we start to unlock these assets within West Africa, particularly Nigeria, you will start to see that, investors will start to come around and, start to make those investments into the continent. Like I already mentioned, right, we're seeing North Sea operators looking to do more business in Africa. About 18.9 billion has been committed so far, in initiatives, not just in Africa, but across the world. And so we need to be riding this trajectory, tell our own stories, come to the energy export conferences, and speak about, the great things that, Nigerian indigenous companies are doing, because this is how we attract those investments into the continent. Right.
We're already seeing, a little change there when it comes to how much, the Dangote refinery gets, when it comes to feedstock. We're seeing the NUPRC reporting one thing, the Dangote refinery reporting another, what they receive. But how can a partnership like this, help a refinery like Dangote actually get the oil, that they need to give us more fuel?
I suppose, a very good point, when we look at it from a data point perspective, various, data sources, what's the golden source of truth. But the most important thing, like we are seeing, is, Scotland itself, has the technology and the capital. Nigeria has the assets and the ambition. We want to achieve 3 billion barrels of oil production by 2030. We've got very ambitious indigenous companies who have been successful in this 2025 licensing round. Now, these entrepreneurs and this ambition needs to be matched with the capital and technology that will unlock these assets. Because by unlocking these assets, then we're able to feed, the Dangote refinery with the crude that it needs, going forward into the future. And I'm sure this is very, very achievable because I suppose, given the transparency we're seeing in the market, given the recent licensing round and the transparency with the NUPRC process, that gives investors a lot of confidence and interest into Nigeria at the moment.
All right, thank you so much. I guess that's a good place to anchor it. George Okoroma is a delegation partner, Scottish Africa Business Association. Thank you for joining us this morning.
Thank you so much.
All right, now we'll take a moment. Now we get to see what's happening in the global economy.
Thank you so much, Ladi. Good morning, everyone. Welcome to the Global News part of Business Morning. And of course, going global, we start from what's going on in the United Kingdom. Consumer confidence has hit its highest level in almost 2 years in July. This is according to research that indicates that closing stages of the Men's Football World Cup and more people holidaying in the UK, those have lifted summer spending. A truce in the Middle East conflict in June and the arrival of a new prime minister also gave a lift to consumers after a long period of heightened uncertainty. A long-running monthly consumer spending survey by Barclays showed that 30% of those surveyed felt confident about the strength of the UK economy in July, and this represents a 21-month high and a 6 percentage point improvement compared to what they had in June. Consumer card spending grew also by 2% year on year last month after 1.9% increase in June, and all of this is captured in the report by Barclays. And oil prices have risen slightly this morning to the highest level in more than a week as hopes recede on a deal between the US and Iran. That's to end the war and reopen the Strait of Hormuz after President Donald Trump demanded compensation for damage incurred by the United States. The Brent features and US crude features, those we saw, they both increased, and I'm sure you saw that earlier today after the US president responded to Iran's demands for compensation and an end to transactions and military threats before it will restart talks with the US. Those conditions largely reflect the terms of the Memorandum of Understanding signed by both sides in June, which has since broken down. And Iran has been negotiating with Oman about how to reopen the Strait of Hormuz, a key shipping passage, defining new shipping lanes, and got closer to a pact. The strait has been effectively closed for months after the US and Israel started attacking Tehran. And still President Trump there, his social media company, they've reported a loss of $238 million between April and June as it branched into ventures unrelated to media, including cryptocurrencies. Well, the quarterly loss is more than 10 times the amount reported during the same period a year earlier, according to Trump Media and Technology Group, which owns the president's Truth Social platform. The firm says that it will refocus on its social media mission, which includes a controversial service that offers faster access to market-moving posts from the platform's most influential users. The company says more than 10 customers have signed up for it, paying between $60,000 and $100,000 a month. In July, it announced a plan to give Wall Street traders faster access to posts on Truth Social, where President Trump frequently makes announcements. It's been viewed as a way to give subscribers an edge in trading stocks and other heavily traded assets. The new service, called Truth API, is expected to provide the company with a new revenue stream, and Trump Media says its earnings statement will be set on Monday. And U.S. investment giants, including Apollo Global Management Incorporated, Blackstone Incorporated, BlackRock Incorporated, and Brookfield Asset Management, they are partnering NVIDIA Corporation to source $500 billion in financing for artificial intelligence infrastructure. The coalition, which also includes Goldman Sachs Group and KKR and Co., will create dedicated pools of capital at significant scale at attractive rates for NVIDIA customers. This is according to a statement by NVIDIA Chief Executive Officer Jensen Huang. He said this during an interview, and he said he approached only 6 firms for the commitment and none turned him down. Retail investors sold SpaceX stock on a net basis for the first time since the company's June initial public offering. This is according to research data. Individual traders offloaded a net of $4.5 million worth of shares in Elon Musk's rocket company on August, and the figure marks the first negative reading since SpaceX went public on June 12. The selling remains small compared to the stock's previous trading activity, and the largest single-day net purchase by retail investors reached $144.6 million. That happened on June 16, and this reversal follows a brief return to buying just 2 days earlier. August 5, retail investors purchased shares as the stock fell 13.6%, recording the 4th highest net buying day since the IPO. The August 5 decline comes after SpaceX released its first quarterly earnings report as a public company, and the report highlighted faster returns from artificial intelligence spending, though questions persist about the duration of support from its profitable Starlink business for AI investment. And Anthropic has signed a $9.1 billion long-term agreement with Riot Platforms to secure AI computing capacity. This highlights the AI developers' aggressive push to lock in infrastructure as demand for its cloud tools continue to grow. Riot shares jumped 25% to $24.40 late yesterday after the company disclosed the data center agreement earlier that day without naming its customer. And the reports indicate that Anthropic is the customer behind Riot's previously undisclosed data center agreement, citing people who are in the market. The agreement covers 191 megawatts of computing capacity at Riot's Rockdale, Texas campus and runs through June 2048. Well, Riot expects the contract to generate $9.1 billion in revenue, while 2 5-year extension options could take total sales to as much as $16.1 billion. Away from the US and the markets now, Australia, they've left their interest rates steady as expected amid recent cooling inflation numbers. And this follows a softer than expected print for the second quarter right there in Australia. And the RBA left this benchmark unchanged at 4.35%. It was a unanimous decision. The RBA raised interest rate by a cumulative of 75 basis points so far this year. The Philippine government, they are planning to borrow 3.3 trillion pesos next year, and that's up by a fifth as it seeks to revitalize an economy that's rocked by conflict in the Middle East and a corruption scandal. The proposed debt, mostly to be raised domestically, would account for 46% of next year's national budget, which is about 7.2 trillion pesos. This is according to data from the Department of Budget and Management. It would be 20% higher than this year's revised borrowing plan of 2.73 trillion pesos. Well, those are the global stories for now. Back to you, Laddie.
All right, thank you so much, Ini. And we see for the NGX there, it's just about 9 basis points down in early trade today. Banks are getting attention from investors at this point. We see the likes of First Holdco still, there's profit taken there, down about 1.41%. Most of the banks are up though, but the banking counter is pulled back. At this point, oil and gas up about 4 basis points, with Wando up about 1.14%. So it's still really early right there in trading, but that's the attention. Those are the stocks getting attention right there on the NGX. And we see gold up about 0.29% and Bitcoin up about 0.41%. So we'll see if it's risk-on sentiment this week. Still tracking that. Investors watching what's happening at the Strait of Hormuz and the war in Iran. Well, that's Business Morning today. Thank you so much for watching. In John McCall will be back at 1:30 with what's happening and what's driving markets. I'm Laddie Williams. Bye for now.